Without mixing words, this is going to be one of the best trade strategy breakdown video you will ever come across. And this probably will be the last video of its kind from this moment henceforth, because there's so much information I'm going to be dishing out in this video, and it would only be unfair to my mentees to be sharing so much information freely on here. As such, I will implore you to sit back, away from any distractions, and pay very close attention to this video. I got in on this sell trade on volatility 25 1S index right here today, and this took slightly a little over 12 hours to get to my anticipated take profit level. Firstly, I need to say this, guys. Once you want to have a well-informed bias of where price is likely heading for any given day, take a very good look at the daily time frame. Now, this bearish move right here is the sell trade I got in on. And very quickly, we'll look at the daily time frame. Firstly, we were reacting off a key level. So we had clearly seen price broke and close below this key level. As you can see, looking to the left, the previous time's price tested the level. As you can see, the level held price as a support right here. And then we can see lots of price bounces off of the level upon retest. At this point, we had the level as a resistance. And then more reactions looking to the left. So clearly we had a break of this level and then a retest of this level. I did not manage to get a sell trade opportunity at the retest of this level. But then what I noticed was the fact that after breaking this level, we had a kind of sideways movement for a little over 3 days, 1, 2, 3, 4, yeah, for 4 days. So it was a kind of a range, a daily range. So our price kind of played in this daily range for 1, 2, 3, 4, 5 days, then before eventually having a break of the level. Now, pay attention to the daily candlestick close right at this level. That's not to say the wicks are not important. But then pay attention to the daily candlestick closes right here. So we had the break of the level, the initial retest of the level, and then we bounced off from the level, had a nice bearish sell, and then we're closed just at this level right here, and then we're back to the upside again. Then also we're back again to this level. We managed to close above the level also, And then eventually, 2 days ago, I'd seen that what after trading above this level for 1, 2, 3, 4, 5 days, we had a nice daily bearish candlestick close, breaking below this level. Now, this is where it gets interesting, guys. As soon as we add this daily bearish candlestick close below this level, having seen price clearly in the daily range for 4 days, the previous 4 days, as soon as we add this daily bearish candlestick close below this level, I quickly went ahead to identify the next level I felt like price was going to trade into before finding that next support. And then look to our left again and identified the level right about here. Going to the fact that what previously we had price coming to the level, and then we had the level acted as a support, but the level also as a support right about here. We have a break below the level, then with the level now acting as a resistance because we're below the level. And then also here we're seeing the level acting as a support. So this for me is the next key level I felt price was certainly going to trade into after breaking out from the daily range. Now I'd established that what we had broken out of a daily range as soon as we had this daily bearish candlestick close 2 days ago. And then I quickly identified the next level stop for volatility 25 minutes, and that would be what this very key level right about here. And then I needed to then what look out for possible potential selling opportunities to ride the move to my anticipated take profit level, which would be the key level right about here. And now then, if you notice very well, as soon as we're closed this bearish, breaking the daily range, this little weak retest of this structured level was where I had scaled down to the lower time frame for sell entry, providing this nice bearish daily candlestick movement, eating my take profits. Now, what would you notice about the level right here? Previously, we had the level acting as a support, and then we're having to see what a daily break of the level. Now, you know this level is a structured level because a broken support previously becomes a new resistance. So as soon as we had a break of the level, I was waiting for price to come back to retest the level where I was potentially looking to sell from the level. Now this is where I scaled down to the lower time frame for entry confirmation. And I get asked quite a number of times, what is the best lower time frames for my entry? And now I need to say this, guys. I wouldn't advise sticking to just one time frame when once you've clearly identified your area of interest, in this case, a structured level, a daily structured level, previously broken support, now a new resistance, I wouldn't advise sticking to just one time frame for entry criteria. You have to understand that your best chances of getting the higher probabilities trade signal would be scanning through every one of these lower time frames, anyway from the 1 hourly time frame. Personally, I scale down to the 1 hourly time frame, the 30 minutes time frame, and even all the way down to the 15 minutes time frame at the retest of my identified area of interests to look out for price action confirmations, my entry confirmations in line with my trade bias from the higher time frames. Now, just to be able to explain this even more better, so we have this being the daily, we have this being the daily candlestick close that broke the 4 days range. So take note of this second, or take note of the second line right about here. And then let's take this to the 1 hourly time frame. Now this right here is the close I just identified from the daily time frame that led to the break of the daily range, 4 days range. This is it. This is that close. So every one of these other price actions you can see before that candlestick, every one of these other price actions before this candlestick that led to the daily break of that range were all just forming what within the daily range. And now, if you pay attention to these guys, this is a 1 hourly time frame. Now, pay attention to this level. And then let's take this to the 15 minutes time frame. Guys, if you want to pause this video very quickly, pay attention to what's the price actions around this level. This is a 15 minutes time frame, and then I would take this to the 30 minutes time frame. And this is the 30 minutes time frame. Guys, you can pause this so you can look at it very clearly, and then moving back to the 1 hourly time frame. Now, guys, amongst these three lower time frames, the 15 minutes time frame, the 30 minutes time frame, and this 1 hourly time frame, which one of these time frames look even clearer, presents us an even clearer price action around this level just before the break of the daily range? Your guess is as good as mine, right? The 1 hourly time frame. Now, I'm going to be breaking down the 1 hourly time frame. It is not just only because I had my entry confirmation for sales at the retest of the daily structured level from the 1 hourly time frame, but also because amongst these three lower time frames, the 15 minutes, the 30 minutes, and the 1 hourly time frame, the 1 hourly time frame is presenting me a less complicated price action. So, hence, as at the time I was investigating the reasons as to why I needed to get in on sell at the retest of the daily structured level, the 1 hourly time frame made way much sense to me because the price action here is less complicated in comparison to that of the 30 minutes and the 50 minutes time frame. Now, this is where this now goes back to answering the question of what would be your most preferred time frame when once you've clearly identified the higher time frame area of interest, scaling down to the lower time frames. It's not just one time frame that's your favorite. You have to scan back and forth between every one of these lower time frames and then go with the time frame that gives you the best price action, the least complicated price action. And in this case, I'd stick with using the daily time frame. So here we have the daily candlestick close right about this level that led to the break of the structure. And this was that daily wick retest. Just 1-2 candlestick was a daily wick retest of the structured level, after which I had my entry for shorts. Now, clearly I want to investigate what played out here and why I ended up jumping in on my sales at this level. What I would notice from the 1 hour time frame was the fact that we had price made a nice bearish impulse. As you can see, this impulsive movement right about here. Breaking below a previous low, forming a lower low. So I have that being a lower low. And then we have a lower high right about here. So clearly we had a lower high and a lower low. So from the 1 hourly time frame, we had a market structure that is in line with the daily time frame by the bearish market structure. Safe to say, scaling down to the lower time frame, looking out for selling opportunities would be a higher probability trade opportunity because it's very much in line with the daily time frame. So now we add a nice impulse breaking below this previous low, forming a new low. Now, this is where a lot of traders kind of get it all wrong. When once they identify that a previous structural level has been broken, price has most likely formed a new low, lower than the previous low, and then they start seeing every one of those selling momentum step into the market, breaking below the previous low. Now they tend to feel like, oh yeah, the market is very much heading to the downside, and now they start jumping in on sales. Now, it's not just enough to see price break below a previous low, forming a new lower low. That's not enough reason to what? To get in on the sales. You cannot be selling from this level. This is a rather too cheap a price level to be selling from. Now, you have to understand you want to sell from a premium price level. And how, what do I mean by that? It's always best when once you have clearly identified the break of a structured level, in this case, a previous lower low, with price forming a new lower low, it's always best to wait for some form of a retracement, for price to come a little bit higher. So you are now buying from a what? Slightly higher price. Yeah, so you're now selling rather from a slightly higher price. Hence, we say what? It's best to look to sell from a premium price level. This is too discounted a price level to be selling from. So it's not just okay to be able to identify that what a previous low has been broken and price has formed a new lower low. That's not enough reason to get in on the sales. It's best to wait for some form of retracement. And then my strategy will tell you that one of the ways to identify the premium price levels in this case would be to introduce your Fibonacci retracements from the previous lower high, in this case to the most recent lower low, and then what? Wait for price to retrace into any one of your strong Fibonacci reversal levels. And in this case, you want to wait for price to come into the 0.5, which is the 50, the 61.8, or the 78.6 Fibonacci reversal levels. Any one of these levels will present us a more premium price level to get in on what? The sales in line with the market trend. Now, sorry for digressing. Moving back. So what we have read about here. So clearly we had price made that impulsive movement from a previous lower high, forming a new lower low. And then as long as we stay below this price level, it's safe to say that what? We have the market structure still very much in the bearish market structure. And then what? Anywhere within this previous lower high and this most recent lower low is a safe spot for selling, potential selling opportunities. It's a safe area for potential selling opportunities. And now, like I said, as soon as we identified what that price made this impulsive movement, we cannot jump in on the sales yet. This is where we then want to wait for the retracements to kick in. Now, I know quite a number of traders get this part very complicated also, identifying pullbacks and then what? The impulse. Now, how can you tell that what this movement is only a retracement? And how can you tell that this is indeed the impulse? Firstly, when once you have seen a low that is lower than the previous low, price has made an impulsive movement. That's what it means. And now what makes this a retracement, a pullback? You want to compare the impulsive movement and then the what? The movement against the previous movement. That now tells you if this is a valid pullback, a valid retracement. What do I mean by that? So as soon as we add price, bet the sell-off at this level here, what would you notice? You would notice very distinctively that we add bearish, we had more bigger momentum bearish candlesticks, as you can see, this, and then this, and this, and then this. So you can see very bearish sell candlesticks while we were making this impulse. In comparison with this movement that is opposite to that of this impulse, what would you then notice? You will notice that this is presenting us bigger candlesticks, bigger sell candlesticks than we are having the buy candlesticks for this opposite movement. You can see this is way bigger than this. In fact, this is way bigger than every one of the buy candlesticks that presented us when we were making this opposite movement. What about this? This is twice the size of every one of the buy candlesticks while we're making this movement. What else would you notice again? When we add this sell-off, it took us what? 1, 2, 3, 4, 5 1-hourly candlesticks, 5 sell candlesticks to get from this level to this swing low right about here. And now when we started making the opposite movement to the upside, what then would you notice? It took us 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks to cover that same distance. So what am I saying? I'm saying that what you want to compare the candlestick that were forming during this impulsive leg and that of this opposite movement. And you want to be sure and certain that what this movement is way stronger because what we're clearly and obviously seeing bigger bearish candlesticks when compared to the buy candlesticks at this level. And now this tells you that this is indeed just a pullback because this has more momentum than the opposite movement to the upside. Now, sorry again for digressing. We are clearly seeing price with an 100% retracement back to test this previous lower high, even though we did not manage to break and close above this high. So very much still keeping the market structure from the 1 hourly time frame in a bearish market structure. Because like I'd established previously, as long as we stayed below this level, the market structure is still very much in a bearish market. And now what then did I notice? Upon coming to this level, you will notice on our way to the upside, while we're making the retracements, we had price coming to this level, and then we had price found a little resistance from the level, as you can see, rejections, before eventually breaking past the level. And now then, we have price coming back to the level. Previously, we would have said this level is a resistance because we had a little form of reaction off of the level, and having seen price broken above the level, upon retesting the level, expect for the level to now act as a support, but that is not the case here. You can see as soon as we came back to the level, we immediately broke below the level. So making what this level also a structured level, even from the 1 hourly time frame. Also, if you look to the left, you can see we came into the level here, and then we bounced off from the level. Here also we bounced off from the level, making the level a support, and then what a resistance. And then we have broken below the level again also. And then what? At the retest of this level now, because this is now a 1 hourly structured level. And then don't forget also, this is also our identified daily time frame structured level. The previously broken support now turn the daily resistance. And also from the 1 hourly time frame, you can see what this is also a 1 hourly structured level. Then we're below the structured level. And then we haven't seen price now retest the level. I had my entry for sale somewhere right about here. And so why did I get in on the sales from this level? What you will notice is the fact that we had price, if you know your chart patterns very well, presented us a reversal chart pattern, head and shoulder pattern. This is not an entirely perfect head and shoulder pattern, but that notwithstanding, what would you notice? You notice that the left shoulder and the potential right shoulder is forming at where? At our structured level, our daily structured level, like we had established when we took a look at the daily time frame chart, and also now with this level being also our 1 hourly time frame structured level. Looking to the left, you can see support, resistance, break below the level, and then what? Resistance. So clearly we had a chart reversal pattern confirming that the market will most likely now head to the downside. And then the most important of them all would be the fact that what? Upon the retest of this level, what then would you see? You'd see a rejection candlestick. So we tried to get to the level, and then we had a rejection from the level. We had the next 1 hourly candlestick also closed as a rejection candlestick from the upside. In fact, we had what? 1, 2, 3, 4 rejections from the upside. Now, what does this tell you? This tells us that what? Price, the buyers were trying to what? Move price to the upside, but then what? The sellers rejected what? Buyers from moving price past this level. A second time, what? The buyers tried to push price up, but then what? The sellers stepped in, rejecting the buyers from moving price past this level a second time. And then, of course, what? During the potential right shoulder, we having to see what? The buyer stepped in again a third time to push price past the level, and then sellers rejected. Multiple number of times, quite a number of times, what we have seen sellers rejecting the buyers from moving price past this level. Multiple rejection candlesticks from this level. Now, guys, once you get to see rejection candlesticks at the retest of your identified area of interest, once you get to see rejection candlesticks from a level where you are looking to potentially trade from, don't sleep on it, guys. Don't sleep on it. What this tells you is what? It puts the chances of the chances of your trade going in your favor, puts the chances even higher. Now, this means that what? If price wanted to go past this level, it would have done that already. Multiple number of times, quite a number of times, price tried to get past this level, but what? We kept having the rejections from the upside. If price wanted to do so, it would have done that already. And then what? Like I had established previously, this was the daily candlestick that broke the range. And then we had the nice retests. And then we had the next 1 hourly candlestick closing as a rejection also from the upside. If price wanted to do so, to trade above this level, it would have done that already, but we closed also as a rejection candlestick. Now, this is a typical example of a hanging man candlestick pattern, but the name is not really important. Understanding why this is forming at this very level is more important. Now we're ending up seeing rejection again from the upside. And as soon as this 1 hourly candlestick closed, that was my entry signal just before the bearish momentum stepped in. The close of the 1 hourly candlestick right here was my entry signal. And then, of course, I had a very tight stop loss on this. Now, you have to understand that what multiple number of times we have tried to what the buyers have tried to push price above this level, but what sellers kept on rejecting the buyers from doing so. So I had a very tight stop loss owing to the fact that if for any reason we had a candlestick close above this level, it's most likely because price wants to keep heading to the upside. So I was quite certain for a fact that this level is very potent because I kept on having lots of rejections from the upside, with this being my potential right shoulder of the head and shoulder pattern. And then I had my entry for short just at the close of the hanging man candlestick there before the selling momentum stepped in. And then my take profits was all the way down here. I actually had my first level target for take profits. So I pretty much was looking for price to come into the previous low. And then as soon as I saw that we closed very bearish at this level, you can see the nice 1 hourly bearish engulfing candlestick that closed right at the level here. I knew for a fact that we were going to keep heading to the downside. Now, this is where I keep advising my mentees that once you want to identify take profit levels, firstly, the previous lows would be the first level to look for your first take profits. And then also for other take profits, you want to make use of the Fibonacci retracement right about here from this level to the most recent lower low. So we have this being TP1, which is the previous lows. Then negative 27.2 would be the best level for take profit 2. And then, like I advise my students, my mentees actually, you can get in on multiple positions rather, three trade positions, and then each one of the different positions, you would set your take profits for every one of these 3 levels. And lastly, the negative 61.8 would be your take profit 3 level. So this gives you ideas of where you would likely be looking to get out of your trade using the Fibonacci retracement from the previous lower high to the most recent lower low, the negative 27.2, the take profit 2 level, the negative 61.8, your take profit 3 level. And then what? You're opening 3 positions. Every one of these 3 positions, you're using respectively your take profits for every one of these 3 different positions will align with this for the first position, and then this for your second position, then this for the third position. And this way, you are able to maximize the entire movement all the way to the downside. And this, as soon as I got in on the sell trade, just a little over 12 hours, I held till this smashed my overall take profit right about here for a 1 to 8 risk to reward.